REITs are required by law to distribute 90% of taxable income to shareholders, making them one of the most reliable income-producing investments available. The average REIT yields 4 to 6% annually. A REIT is a company that owns, operates, or finances income-producing real estate. You buy shares like any stock, and they pay you rent income as dividends. No tenants, no maintenance, no ASLI. Residential REITs own apartments. Commercial REITs own office buildings. Retail REITs own shopping centers. Industrial REITs own warehouses. And specialty REITs own everything from cell towers to data centers. Each has different risk profiles. Realty Income, Stag Industrial, and Agree Realty pay monthly dividends instead of quarterly. For investors seeking regular cash flow, monthly payers create a more predictable income stream. REIT dividends are usually taxed as ordinary income, not qualified dividends. For this reason, hold REITs in tax-advantaged accounts like a Roth IRA when possible to maximize after-tax returns. Do you invest in REITs? Share your favorites in the comments. Subscribe for the complete passive income investing series.